We got some things to talk about that matter, not the least of which is, will the recession history repeat itself? Public and private jobs are slowing down. Well, the good news is that the public sector has quit hiring, maybe, but the bad news is private sector is slowing down dramatically. Unemployment is rising. What's your thoughts?
Well, I think it's interesting because the job vacancy is continuing to drop. And my question is AI responsible? We're going to dig into that. And immigration definitely is slowing down marginally. What's going to happen into the future? We have some exciting charts and forecasts and to show people where this is all going. But the big question, what does this all mean for real estate investors? And is right now a good time to get into real estate? You're going to find out.
Let's talk about it.
Ladies and gentlemen, welcome to Rein It In, episode number 49. You're in for a treat.
So if you're liking Rein It In, make sure that you like, that you subscribe. Let us know what you like, even what you don't like. Hit that button and subscribe.
Patrick, I think you asked a phenomenal question right there, which is, will recession history repeat itself? Do you see this again and again and again? And I think we got some compelling charts. We should dig into it because there are some leading indicators here that are kind of pointing us in a particular direction. And I think it's important for people to know where we are and where we're going.
Well, this goes back to conversations we've had many times. What makes the world go around, I should say, or maybe makes it go down, is jobs or the lack of jobs. And when we look at this chart, we can see historically what happens. Those gray bars that we're looking at right now are recessionary times. So when we consider what happens with unemployment through that, and I guess historically where the recession occurs, we have to pay attention given our unemployment is rising. Now, this is a Canadian chart of Canadian unemployment, but I'm going to go back always to what it is. It's about regional unemployment. However, this is a great chart to consider the fact that number one, we see a recession happening. And if you look closely at this chart, you start to see that the unemployment spikes near the end of a recession. So it's an interesting dynamic of lag that we have to pay attention to and be aware of, because we'll get optimistic and then all of a sudden our unemployment will spike even higher as we're coming out of the recession. So it's an interesting kind of indicator of what we may be looking forward to.
But I think let's be clear right now. The powers that be, the data, I should say, is not pointing to a recession yet. We're not technically in a recession yet, because a technical recession is 2 quarters of negative GDP. We haven't had that, Patrick. So we did have one negative quarter of GDP, but then the next one was positive. So now we're kind of got to wait again. But that being said, you made a very, very good point, which is real estate is regional. As we know, we've preached that on the show a million times. And, you know, when you look at these unemployment and these employment numbers, you're typically looking at provincial at best, if not national numbers. And that's just very misleading for investors, isn't it, Patrick? Because just because the country is not in a recession, it doesn't mean the segment of real estate you're investing in your particular city, in your particular region, that part might be in an actual recession. So important for investors to dig into their regions, isn't it?
Well, we have to consider, listen, let's unpack some of this data just a little bit, which is to say that unemployment, yes, Canada-wide is ticking up 6.5%. But when you look regionally, you look at Toronto, it's up over 8%. You look in Alberta, it's up over 7%. And the reality of it is that the jobs that are being created, you know, number one, we talked about it many times, public sector jobs. So whether we agree or disagree is irrelevant. The reality of it is that we're not being productive. So in other words, when we look at public sector jobs, there's just not productivity there. So we're not actually creating jobs that are driving GDP. Our GDP has been driven by primarily consumerism, which we've talked about many times, is being and has been in the past being driven by housing, which has slowed down. So all of this lag that is starting to build up, when we look specifically, you know, talk about Southern Ontario and talk to many, and in their world, they are absolutely in a recession right now, given what's happening in the job market or the lack of jobs that are available. So it depends on where you're at. But when we look at a country as a whole, we keep beating this drum for people to pay attention to, which is, what is the real math? We don't export, our manufacturing is down, and that speaks to productivity. We'll talk about it in a minute, but we also look at the private sector, and the private sector isn't driving new job growth. Huge issue. So from an investor point of view, let's bring it back to that. and that is that we have to pay attention to, number one, we have to screen our tenants. The demand for rentals isn't going down. We're seeing rents right across the country soften, but ultimately we have to make sure that our tenants, we're screening them well to make sure they are working, to make sure they've got a job that's going to last. It would be really important for us.
Well, a couple different things I'm seeing here. Number one, I just published a rental market update, Patrick, last Friday, I think it was, in fact. And that's exactly what I was pointing out, is that rents are softening. I talked about all the different categories. I showed some data. People should check that out. Go to, just search it on YouTube, look up Fisher's account, you'll see it there. But one thing that's fascinating, Patrick, is just because they're softening rental pricing a little bit. And when I say softening, I mean prices are down $50, $25, $30, $70. Like, it's not like they're, cut in half. And I think it's important for people to realize. The other thing that investors ask themselves is is something wrong with the rental market? And the answer is absolutely not. There's just, like, we've been pushing the rents up so much in the last year over year over year for many, many years. In fact, this is just, we're at the top, we're taking a bit of a breather, and the rents are still very, very good. So the numbers still work, which is interesting. That's on the rents. But I want to come back to the job vacancies that you talked about, Patrick, because when it comes specifically to the construction industry, one of the things we're seeing in Peterborough, and just keep in mind, for you and me and probably a bunch of people watching this show, like, Peterborough is like this super cool, hour and a half to Toronto. It's like, it's pretty, for me, I go to Toronto for dinner and I come home. Like, it's not a big deal. But for people from Toronto, Peterborough is like at the other end of the world. In fact, I was talking to an investor yesterday from Richmond Hill. She talked about it as going out east. I'm not kidding you. She said, like, oh, I don't drive out east very much. I said, are you talking about like the other side of the country? Or are you talking about Peterborough? She's like, no, it's so far. Peterborough's like really far out of the way. Anyways, the point there, Patrick, and as I'm all going to this point, which is, I'm seeing a ton of people, tradespeople, coming from Toronto to Peterborough in order to get contracts. That's how desperate they're becoming. Is they are actually some of the big contracts out here that my colleagues and I typically work, together on. Toronto companies are coming in and underbidding Peterborough companies on these contracts just to keep their guys busy, because they got nothing going on over there. We're seeing a lot of that right here in Peterborough and in surrounding regions, by the way.
Yeah, there's a lot of things going on that we have to pay attention to around the job market. And we talk about it. First off, I want to be really clear. From a real estate investment point of view, this is the time to be looking for and finding great opportunities, because they are happening. So regardless of what we're talking about and what feels like a bad economy, which seems to be bad and getting worse, it doesn't mean that you take your foot off the gas in terms of looking at real estate deals. I have not changed my thesis around owning real estate as a store of value. Long term, just right now is the great time to buy, which is counterintuitive, JG. Everybody loves to buy into a boom market because it's exciting and it's fun and everybody's getting rich and everybody's a real estate genius. It is right now that the most sophisticated investors are actually looking at deals because of exactly what we're talking about: an economy slowing down, job growth shrinking, unemployment going up, because this is where the opportunities exist. So I want to make that part of it really clear. But having said that, we have to go into it knowing that economically things are shifting. And here's a fundamental that I don't think we shine enough light on, in my view, which is that we have never been at the effect of the global economy to the degree we are today. We talk about the wars, we talk about what's happening, like we're literally, by some descriptions, we're inches away from the potential third world war. And it's real, it's happening, there's threats, there's data to support it. We don't know where that's going to go. And then just as we're shooting this today, the news comes in, breaking news, the dock workers are going on strike. So that means supply chains are going to be shut down. So it's all to say this, JG, is that what we're talking about here, I want to make sure that people hear it in the right context. We're painting a picture of what's going on, but that doesn't mean you take your foot off the gas of looking for real estate deals. And I just want to be uber clear about that.
Look out to the horizon. Everything the light touches belongs to someone else.
Yeah, I did an investor tour last Saturday, Patrick, and it was amazing. We're looking at specifically we did an investor tour to show people how we're turning single family homes into, essentially triplexes by adding an ADU and adding a coach home or duplex in the single
But
family.
JD, let me interrupt that. This is you're doing exactly what we talk about. You're looking and you're adjusting your strategy to fit what's going on economically. And that's exactly what we have been saying for years is there's no bad economies for investing in real estate. There's just the wrong strategy in the economy. And so what you're doing is exactly what investors need to do. What is going to be the best strategy within this economy? And of course, expanding on units in terms of densification makes total sense.
There is some incredible deals taken, like they're out there right now. I mean, it's an incredible time right now. And that's what we were showing people. We had actual properties, and one of the realtors were doing this with, Pat was out here, and he was showing some properties, and he's like, you could pick this thing up for 520, 530, a low. He even said you should offer 470 for this one particular property. I'm like, it's so funny because it was not 18 months ago, Patrick. If I said to someone you could have a property for 470,000, they would lose their. And now they were willing to pay 600 back then, but they're not willing to pay 470 now. It makes no sense. And the people that are getting in now, I'm telling you, are going to be incredibly, incredibly thankful. And they're seeing the opportunities, and there are a ton of opportunities right now. It's staggering, Patrick. It's the best time. It is absolutely the best time.
Investor sentiment is such a weird beast, isn't it? Psychologically, because as much as we talk about data, people keep getting really tied up in the emotion of it. And that's what shuts it down. To your point, they're happy to chase it when it's a boom and everybody's being a genius. I'll pay 600,000, but it comes to 470 and they go, nope. That makes no sense.
That's crazy.
Emotion.
But now emotions are a key part, man. I mean, that's why, that's all the really sophisticated investors talk about, how managing your emotions is just as, if not more important than managing the rest of it. It's critical. Now, one of the things we talked about here is the job searches, and how there's longer job searches than ever before. It's taking people longer to find a job than it has in quite some time, especially the young people. And we can speak to that. My question for you is, and I think the debate is, and this is where I want to get into, is I think this is a function both of demographics, which is the boomers sticking it out longer in their jobs. I think that's a key thing.
100%. Yeah.
But I also think it has a huge part to do with technology, and specifically AI, because I think a lot of people, business owners, are saying, listen, if I don't have to hire people right now, I won't, because of the uncertainty in the marketplace. They are relying on technology to solve their problems instead of people, and they're going to keep kicking that can down the road as long as they possibly can. And I think that's a driving factor to this concept as well.
Well, it is happening. I don't think it's just AI. I think that's a big part of it. I mean, you consider, for example, the dock workers in the U.S., that head of the union in the U.S. of the dock workers, or whatever they're called. I'm not sure of the term. But anyways, he looked right into the camera and says, whoever he's talking to, you're trying to take away our jobs using technology. That's not going to happen. We've got control of this beast, and we're going to run this dock, and we're going to shut down. If you guys try and take our jobs with technology and not give us the money that we deserve, we're shutting it down. And they must have called his bluff, because he's literally shut it down. So that's going to have a huge impact on Canada. As a matter of fact, it doesn't affect some of the docks in Canada. I don't know all the details. This is like literally, we got this information as we're going on air. But ultimately, that's what's happening. So is it AI? Yes, that's a big part of it. And the other part of it, though, is ultimately, which has been going on for, at least 3 or 4 years now, is the private sector is just slowing down. The increase in interest rates, JG, this as a business owner, you're not going to be as quick to borrow money for expanding your business, getting into operations. You're happy to do it investing in real estate, or to the degree you're happy to do it, you're being cautious about it. But businesses that aren't investing in real estate, that are running operations, they're not expanding. They're not going to borrow money at this rate and try and hope, for example, that consumers are going to pull their wallets out of their pocket. They're just not going to. So it is a self-fulfilling prophecy in terms of the downward spiral of what happens in business, and they're being cautious. So between technology happening and them not growing their businesses, private sector, and the government not getting behind private sector, it's all part of what's slowing us down. So I don't know where
I think it's interesting because I think what's going to happen is I actually think this is the first. I think this is a precursor to, everyone's concerned about AI taking jobs, like, the dock workers, which I have my opinions on. Actually, I want to get into that first after in a second. But, everyone's concerned about AI taking jobs. But I think the first part of this whole wave, eventually that will happen. I think it will take some. There's no doubt. It won't take all, but it'll take some. However, I think the first part is exactly what's happening, which is it will delay growth in the economy, because those in the job sector specifically, because people can now do more with these tools. They're being more productive. And by the way, we're just starting. You and I did this conference, Patrick, on technology. What was that, 2-3 years ago? We were so ahead of it, dude.
I know.
I mean, we talked about this stuff 3 years ago, and we're just starting to scratch the surface today. And I got to say that this is so early on in the game that wait another 2-3 years, and I think that it's going to be radically different than where we are today. And I got to say, I thought we would have been further ahead 3 years ago. I thought we'd been further ahead today than where we are. But we haven't even started scratching the surface on productivity and this technology stuff and AI and all this various stuff. It is going to have a massive impact, and we're starting to just now see that, I think.
Yep, 100%.
Now, you want to talk about the dock workers, though? Because I got my opinions on this. You're a former union guy. You worked at the union back in the day.
What are you talking about? I've never worked with unions.
Didn't you? For like that hot minute in that summer of 1972?
So do you want to I'll share a quick story about where my experience with unions were. Is that I was working in the oil field. It was the only job I ever had back in 1977 when I got that job. And my first year, and one of the things that I had to do one day was drop off some equipment at a particular business in Edmonton. So I jump in the truck, they load me up with this equipment. I go over, I pull up, I go, and there's a bunch of guys leaning up against the wall. It's in the summer, and they're sitting up eating their lunch. And so I go, hey guys, I'm here. Let's drop this off. Now it's about 5 minutes after 12. And I say, just here to drop this stuff off. And they go, yeah, we're just going to eat our lunch. We get off at 12:30. Hey, listen, guys, enjoy your lunch. Let me kick it off. I'll load it up. No problem. And they look at me and they go, yeah, no, don't touch that. We'll get at it after lunch. And then a little bit more conversation. And it was union. We work to rule. This is the deal. You cannot unload that truck. And so I had to sit there and swing my feet off the tailgate of the truck, having a conversation with a bunch of guys eating lunch until lunch was over. And at 12:30 and a half, they unloaded the truck, and then I got to drive away. And that was my first experience back when I was 18 years old. And that was my first experience with a union, and that kind of tainted my view of the world. I know I'm not going to debate unions. There was a time and a place for them. Now I think they've just overstepped their bounds, but that's a different conversation.
I agree with you 100%. I have a very similar experience, Patrick. I was 16 years old, working in a plant in a mining operation. And I had to I was the stock boy. I had to clean up this stock room. That's what that was the project they gave me for the summer, right? They thought I would take all summer to do it. Well, I did it in about 7 days, but I needed a pallet, so I go and I see a pallet. So what do? I pick up the pallet with my hands and I bring the pallet over, walk it over. And anyways, I got written up for this. And so I'm shocked. I'm like, what are you guys writing me up for? I mean, you guys wanted me to do this job all summer. I got it done in 7 days and I did what I had to do. I mean, this is how I was raised. I just get shit done. And oh no. And it turns out at the crux of the issue was I picked up the pallet, and the forklift driver was very upset that I essentially could have taken his job because I picked up the pallet. I'm like, this is the most stupid shit I've ever heard. And this was my experience of unions as well, Patrick.
Yeah. It's tough. We're capped.
What do you think's going to happen though, dude? Because I'm seeing a lot of these union fights with, their various employers. LCBO just had it. Air Canada's going through it. the dock workers. I mean, it goes on. And I think this is actually in the next couple of years, you're going to see way more of this. I think this is, again, the precursor of what's to come. But like, they are fighting a losing battle, in my opinion, Patrick, because the people who built the horse and carriage company and their union that fought like hell for the automotive industry to not replace them, it was all futile. It was just wasting time. The smartest person was the guy who said,
you know what? I'm going to learn to be an automotive mechanic because that's where the market is going, not just stick with the horse and buggy.
This is what's happening with these dock workers, in my opinion.
Well, it's an interesting cycle, isn't it? Because those dock workers are going to want more money. They're going to fight for their jobs because they don't want technology to take those jobs. Then they're going to get the raise. They're going to keep things. They're going to kick the can down the road. In the meantime, taxes will go up and the cost of goods will go up because now that particular port, those ports have to generate more revenue and figure out how they're going to pay these guys. So costs will go up. And, it's this constant cycle of rising costs.
I'm filling up some buckets with snow to melt and use it for water. You can take anything in the entire world, and I can figure out a way to get it for 80, 90% off, or even free.
But that's all part of the game that gets played, and that's why inflation continues to be inflation. And listen, we can go off on monetary policy, but ultimately, this is what's happening. Yes.
Yeah, but you can't these. But here's what's interesting. I'll say these people, and we're talking about the dock workers right now. But the point is that people blame monetary policy. That this is a self-fulfilling death spiral, and the smartest people of this whole thing are the ones that are going to skate to where the puck is going, as Wayne Gretzky would say. Which is go to where the industry is going. And there's going to have to be a lot of changes into the future. And there are some people that are looking there, and there's some people that's just going to fight like hell. But at the end of the day, it's a losing battle. The days are numbered. This thing is going to zero for them. The question is how fast. Now, they might delay it a little bit with their tactics, but it's going to zero.
Okay, we've digressed. Let's get back on the topic of real estate.
Let's talk about the Bank of Canada, because CIBC just came out, and I love this, Patrick, because JG's prophecy's coming true, which is CIBC is now saying the Bank of Canada is going to do a double rate cut. That's what I'm calling it, which means 50 basis point cut on the next announcement, which is, I think, in a couple weeks, if I remember right. When is the next announcement? And then the point is another double rate cut before the year end, a full 1% decrease between now and the end of the year. This would be incredible, I think. And it's interesting because JG did say the Bank of Canada always does too little too late and then too much on the other side. And this may be what's happening right now.
Well, I think people are, if you're an investor and you're investing in real estate and want to buy a deal, and for those who have got mortgages that are being renewed in 2025, which is a majority of them, 2025, 2026, it's good news. The bad news in all of this is because this is what has to be done when an economy starts to slow down. And, ultimately, that's what we're bumping up against. So as much as we want to see the rates come down, we're seeing bond yields continue to kind of be volatile and drop, but they're still very low and they're getting lower. The yield curve has shifted again, and which is an indicator that we probably go into a recession if we want to look at bond yields. Ultimately, we look at interest rates coming down. Good news for investors, but that's because we're seeing, and the Bank of Canada is seeing, a slowdown, recessionary slowdown. And so there's no real concern for inflation anymore, because when we look at inflation, and I think we got to
there is if the dock workers strike. There is if the dock workers strike. No, I'm not kidding. Right? Well, no, that's what caused all the inflation the first time around, was transportation because of COVID. Hey, sounds like we're going back there maybe.
Totally valid point, but they won't. What will they do with that? Because who will they blame it on? What will they blame it on?
What if we blame this on someone who's out of control?
And so it's all to say this, is that when we look at interest rates coming down, good news for investors, not good news given what is happening economically. Again, inflation as of today is 2%. And if you were to strip out shelter costs or even the interest portion of a mortgage payment, we're into that 1.2, 1.3% inflation, which is not good. The Bank of Canada is looking at that going, hold on here, everybody. This is getting too low. We have to keep our inflation at 2%. And so ultimately, it's a game that's being played. Take advantage of the lowering interest rates. I'm just renewing a mortgage, by the way. And I took a variable closed so that I can kick the can down the road and then lock in later if I decide to do that. I want that option because I think interest rates are going to come down.
I just did the exact same thing, Patrick, and I analyzed the market, and I worked with Dahlia. You know Dahlia very well, friend of I was going to say a friend of the pod, but a friend of Rein. Yeah, a friend of Rein, and Dahlia is awesome. Anyways, we did a full blown analysis on this mortgage I'm renewing, and I ended up going with the variable for the same reason you did, which is in the end. Now this, and by the way, this isn't advice. We don't think every investor should do this. But for me, it was definitely the best thing. But I got to say that the catalyst, Patrick, was that I know I'm going to refi that property within the next 5 years to take some equity out of it. And that always variable makes that part easy. And, but there, I was offered some really good fixed rate options, like really good, like mid fours. And I'm like, hey, listen, mid fours, man, you can cash flow at mid fours. There's no doubt about it.
I was offered a 3-year closed 4.6 or 4.7. But anyways, I went. Oh, but I want to just point something out, JG. You did exactly the same thing I did. You know, as much as we are in the game, we have invested in lots of real estate. We're in it every day at some level. We're always having conversations about real estate. I did exactly what you did. I reached out to, in this case, I reached out to Keith Uti. I said, dude, what am I, like, I'm thinking about this. Should I do that? So as much experience as you or I have, we still needed to bounce that idea off somebody who's in the trenches every day going, what's your thoughts on this? Just so we can get another view of the world, let's do some more math. And so I just want to point that out to people, is that these decisions are seemingly straightforward, but I would encourage you to reach out to whatever investor-focused mortgage broker you're working with and just bounce some ideas off before you do anything and make any hard decisions. So that's my guidance there.
Yeah, I would, what's interesting though, Patrick, is it was, I forget how many shows ago, but like this is episode 49, and I don't know if it was episode 44 or 45, I forget, but I said when the Bank of Canada started cutting rates, you called it a big nothing burger. And I said, one of the things that we'll do is it will give hope to some people. And I'm starting to see that on the construction side of Vista Properties Management's business, where we do a lot of construction for people, coach homes, conversions, basement renovations, so on and so forth. I'm telling you, we are slammed. And I have, I think, 8 or 9 site plan consultations in the pipeline right now for investors that were sitting on the sidelines. And now they're saying, okay, I got to start planning this out. I know I'm going to do this. I know we're heading in the right direction. I know we've crested the curve and now rates are going down. So I'm going to do this. Now, they're not all starting today, although I got to say quite a few are. And a lot of people are planning. And you know what? That's the kind of activity, Patrick, that is a very, very good thing in the real estate market. And I'm starting to see it. I'll give you another example. I went golfing with one of my real estate agent friends. He typically turns 8, 10, 12 deals a month. A pretty busy agent, right? Like that's a high productive agent. He had been in the last little bit doing maybe 1. Okay. That's been the slow. So his going rate is 8, 10, 12. He'd been turning 1 deal. Now, that day we were supposed to go golfing. I said, hey, dude, are you coming golfing? He says, I can't go golfing. I'm swamped. He did 5 deals that day, Patrick. That day, 5 deals. And that was just after the last rate cut announcement. So it's starting. I can feel it.
Yeah, I think you're being a little bit optimistic, but I'll give you that one. But I'm seeing, I think, well, of course, you're the rose-colored glasses guy, and that's all good. I think it's smart, and I see that happening. As a matter of fact, I just had a conversation early this morning with a realtor friend of mine here in British Columbia, and he's starting to feel some things pick up. There's some offers going in. But I want to be really clear about something, is that this goes back to property type. Now, I'd be interested to hear what your realtor friend was saying, what he was doing for property types, because my friend here in British Columbia in the Fraser Valley is saying semi-detached, detached stuff's coming up, and actually offers are getting written, and there's multiple offers going in on that type of unit, whereas the condo market continues to be shut down. When we get into Alberta, of course, that semi-detached, detached, duplex, triplex kind of stuff is really moving in a province that is still hot economically. BC slowing down. But in the housing market, seeing some activity has been really great for some guys who've been sitting there going, oh my gosh, I got to get a deal done. So good news is.
Yeah, and to answer your question, what was the property types? Actually, across those 5 deals, it was every property type. There was, but mostly detached. There was, I believe, 1 semi, but there was 1 condo, which actually went for multiple offers because of its price point. I mean, it was priced in the low 3s. It ended up going for the high 3s under multiples. So yeah, I mean, it's a question of people now starting, and I believe, and this is what I said in my rental market update, Patrick, I believe this is why the rents are softening, because the market I operate in is the premium market, meaning the rents that we charge across our portfolio, and we manage over $80 million of real estate. The rents that we charge across our portfolio, they're at the top. They're in the top 90% range, right? And as a result, 90 to 100%. As a result of this, there are some people that are saying, you know what, I'm not going to move to that nicer place. I'm just going to wait and I'm going to buy. And I'm seeing a lot of renters that are in that place where they could buy. Patrick, you and I have said it for the last couple of years, which is a lot. That's why renters have been so good, and that's why rents have been getting pushed up so much, is they couldn't buy. They weren't the financing requirements were not allowing them to purchase. That is changing, and now these people are looking to purchase instead of renting up and renting into the next category. I'm seeing that firsthand.
Okay, so I agree 100%. I want to finish this segment by just saying this. Investors watching this, I'm going to say it again, detached, semi-detached, single family, so 5 units or less, are real estate gold. Buy those, hang on to those. They're not making more of those at this point. And nobody's jumping on the detached right now bandwagon. And we're so far behind, like millions of units behind, JG. If you own and buy, invest in that detached, semi-detached, single family, as in 5 units or less, you're going to do exceptionally well into the future if you've got a long-term view of the world. Okay.
They're so far behind, they're never going to catch up, Patrick. They're so far behind, they're never catching up.
I don't see it happening. Okay, so let's move on to some finance stuff. So first off, there was a 1.5 million shift that the CMHC did. There's a lot to be said about that. New home owners, new home buyers, but certainly in the investment world, none of that's going to have too big of an impact, although it is going to kick or get some contractors / builders engaged, because now they have a new client base that will in fact buy units at that price because they can get financing. Hard to think that a first-time home buyer is actually going to do that, but that's a different conversation. I think the bigger change is the drop in the stress test that is required for refinancing. That's good news. I think it's the best move the government has made in freaking years, because as you know, when we look at that shift, what it does is it keeps the banks honest. So no more, oh, here's a piece of paper, here's your new rate, sign it. No, guess what? Yeah, well, something, I think TD is doing a little bit better than you are. I can go to there. So yes, do I have to qualify? Yes, but at least I'm not bumping up against this stress test, so we can actually get deals done with different bank. I think it's a great move, and I think it'll be very impactful over the long term.
I do agree. It's a great move. I've never heard you say the government done anything well. So I hope people listen carefully, because I do agree. It's a phenomenal move, Patrick. And I'll tell you both of these moves point to one thing, and one thing very clearly, which is the price of real estate is about to go up in a big way. It's going to start moving the other way. And a lot of people have been looking at the headlines and, my God, real estate's so down from the peak and so on and so forth. Most of that's, by the way, but the price of real estate is going to start moving in the upward direction. And these two moves help that, because people can now afford to buy something more expensive. And for CMHC, they can qualify up to $1.5 million. That just pushes the price of real estate up.
But that's a future statement, by the way. So we know that there's still lag to work through the system in terms of what's happening with unemployment, with what's happening economically. So this is the time to get in the game. You're going to continue to hear all the headlines about what's happening with the global economy, the dock workers strike, where ports are shutting down. There's so much uncertainty in the market right now. Get off the sidelines. Start looking at deals, because there's lots of deals out there to be had. For those of you who are in Ontario or British Columbia, Alberta's got a lot of room to run. If you think Calgary's at the top of its game, that's fine. There's still lots of cities, like you look at Lethbridge, you look at Red Deer, you look at Edmonton, you look at Cold Lake, the outlying areas around Edmonton. Alberta's got a good run ahead of it. I would encourage you to investigate there, reach out to. Go ahead.
You're recommending Edmonton now? I thought that was NDP capital of the world right there. I mean, geez, 15-minute cities.
JG, I'm not suggesting you jump in. What did I say? I said, look, don't jump in with both feet. You have to be aware of what's going on the kind of political side of the game. Those are big influencers, and you have to understand that dynamic. Again, we're looking at what's happening in Edmonton right now. We've talked about it many times. 15-minute cities. Well, guess what? The way they're shifting zoning right now, it's like awesome. If you're a real estate investor and you're building and you're developing, listen, Edmonton's a place to be right now. Well, talk to us in 3 or 4 years when we start to see what the impact of the 15-minute cities is.
No, Patrick, I think this is a good thing. Patrick, I think this is a good thing. I think anybody who wants to move their portfolio to Edmonton or Alberta, they should sell me their portfolio in Ontario, give me a call Visture, I'll take a look at your portfolio, and then you can move out west. That's perfect, Patrick. I love this.
Grind him. What if you do that? Just grind him. He's yeah.
But you said something interesting, Patrick. You talked about uncertainty. And I want investors, because I agree there's uncertainty in the world. There always is. But we have way less uncertainty in the real estate market than we've had in the last 2 years. Way less. We know where rates are going. We haven't known for freaking 2 years where they're going. Now we know where they're going. They're going down. We know where the price of real estate is going, right? We know where rents are and where they're going. I think there's way less risk in real estate and way less uncertainty than there has been. But that's the counterintuitive nature of real estate investing. And that's what people should focus on, is wrap their mind around that.
Well, I think it's a great point. And I think that the other side of that, JG, is that so many investors will be sitting on the sidelines waiting for the bottom, trying to find the bottom, trying to time the market, rather than look at every deal. Does it cash flow? Does it make sense today? If it makes sense today, great. Pull the trigger, get that deal done, because it's going to make even more sense into the future. So there's a lot of people sitting on the sidelines waiting for the market to come down even more.
But between those waiting and sitting on the sidelines and those selling to go to Alberta, this is the best time to be an investor in Ontario. I love it.
We talk a lot about what's going on economically, and we look at indicators, and a lot of these are lagging indicators. So we don't see it today. It's in the future state. So one of the things that we talk about recession, are we going into recession or not going into recession? Where are we in recession? All of those conversations, ultimately what we start to see in very historically proven time and again, is people start saving a lot of money prior to a recession. So in other words, one of the leading indicators of going into a recession is the fact that people are packing away dough. So saving rates are increasing, and everybody go, well,
that's good news.
Well, it's actually not good news, because people are afraid of what's going to come into the future. So they're putting money in the bank, which then has that self-fulfilling prophecy again, which is if they're not spending money in an economy that's driven by consumerism, then we start to see the service sector, the retail sector all start to slow down. That becomes problematic. So in other words, when we start to see savings up, people aren't spending money, economy starts to slow down. That is a pre-indicator of an impending recession, something to keep in mind.
Is it an indicator, Patrick, or is it the cause of the recession?
It's just an indicator. It's not a cause. It's one of many causes, but it is certainly one of those things that, it contributes to a recession for sure. People need to spend money, especially in a country that depends on two things for its economy: consumerism and housing. Both have slowed down dramatically.
Let's talk about house prices. ATB Economics published this recently. Patrick, take us through it.
Well, Alberta Treasury Bench, ATB, this is an ATB chart. So when we look at what's happening across the country, We've talked about this many times. Alberta continues to lead the way in terms of growth. There's still lots of runway for it to grow in that housing market. Immigration continues to be very strong. Interprovincial migration continues to be strong. And at the end of the day, it's about affordability. When I was at the real estate investor conferences a couple of weeks ago, or in the past couple of weeks that we were there, I'm talking to many people who have moved into the province. Their number one driver, affordability, and there was, in fact, jobs that they could come to. So when we look at what's happening, no surprise that Alberta leads the way in terms of that growth. And ultimately, that's it. This is nothing new, but it's just confirmation or affirmation, if you will, that Alberta continues to lead the way.
Now, in terms of, and a lot of this is driven obviously by population, Patrick, a lot of this is driven by, immigration and so on and so forth. This is kind of fascinating in terms of, this is a chart that you pulled from Millennial Moron. I have no idea who this person is, but it's kind of interesting to see kind of the forecasts and where things are actually at today.
When I pull these charts, I always look and say, okay, what's the source? We have to look at the source. It's not just being made up. This happened to be, I think, from StatsCan, as much as we trust data from StatsCan. But when we actually look at the non-permanent residents and even the forecast, so there's the reality, which is that black line, and then there's the low, medium, high forecast. It's still over 1 million people that they're bringing into Canada. They're going to continue to bring the immigration up, and they're going to settle it down to appease those squeaky wheels that are complaining. But ultimately, immigration is going to continue to be a big part of what's driving our economy. JG, over the years, we've talked about it so many times. Part of what drives inflation is the fact that we have so much immigration into this country. When they come in, they're buying stuff, they're setting up house, they're doing all the things that they need to do to live, find jobs, set up home. That's all part of what drives our inflation, but it's also part of what drives our economy, consumers. So that's where we're at.
July to July from 2023 to 2024. Interesting because this we can see here in terms of where the population is going and where they settled, where like what provinces are growing. Alberta, not surprising, takes the top cake, but Ontario at 3.2%. I was kind of surprised to see Ontario at the tip top. I mean, we know a lot of people come to Ontario and then make their way out from there, which is interesting. But Ontario's population continues to grow. But essentially, you can see every province has grown in that particular timeline from June 30th to July 1st, 2024.
Well, I've been using the analogy that the glass called employment is only so big, and we keep pouring people into that glass and they're falling out the side. So we're seeing unemployment go up. But ultimately, as people pour into this country, they have to go somewhere, and they're going to go where there are jobs and there's space and there's affordability. And that's why we're seeing the distribution right across the country. And, ultimately, that's just what's going on right now. We just keep filling this cup full of people. We don't have necessarily the infrastructure and or the jobs to support it. And it's going to get messy. We're going to see unemployment go up, but it's an interesting number because ultimately the job vacancy is low because it's full, so, I don't know what to do about that. We're going to have a lot of people, I think, continuing to live on the streets is the sad outcome of that.
All right, Patrick. Well, thanks for this incredible episode. Episode number 49 was quite good. Action-packed. We talked about a lot of stuff. There's no doubt about it. I think it was a great show, and I can't wait for fall 2024 and these double rate cuts. I'm so excited for what's to come.
We covered a lot of ground today, but the good news is we got some live events coming up. So make sure that you're looking at the Rein event calendar, October and November. We've got live events in person, opportunity to network and to learn what's going on in the world of real estate. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.